Hey everyone, the much awaited FOMC day just went ahead and wrapped up. The Federal Reserve lowered their interest rate by 25 basis points. However, that was already priced in. In fact, markets had already agreed on that outcome and the rate cut was already solidified. It was what was said after that really went ahead and drove market price action.
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here. When people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little.
Jerome Powell's forward guidance really went ahead and took the driver's seat for today. I'll go ahead and break down what exactly he said and what it means for markets. So stick around to the end of the video. Now, let's get right into it. So there was a couple things that Jerome Powell went ahead and said that the markets really like and interpreted in a good way. For one, they went ahead and raised their GDP forecast, which is great. They did say that they are very confident in the consumer moving forward, and they don't think that's going to be an issue. Stocks initially went ahead and rallied off of that, so we see that the S&P 500 closed green on the day. If we remember, it was trading flat here, so with indecision, waiting for the actual Fed day. Usually, price action is pretty flat until after the event, until markets and traders have more clarity. And so, the first candle following the Fed day printed green. Same thing goes for the NASDAQ and the Dow Jones, which is a great sign. The next statement from Powell that was really impactful to markets was that they were going to buy $40 billion worth of treasuries in the next 30 days. Now, what would usually be the result of something like that would something like the treasury yield following lower. We did see US 10-year yield drop a little bit. Initially, there was a little bit ahead of like neutral to hawkish tone, but the net result for today was dovishness. So that comment of buying those 40 billion of US treasury yields within the 30 days and perhaps more to come after that really drove yields lower, and that in result lowered the US dollar. So the US dollar was trading in this channel as well, and we just needed a break above or below the two defined channels that I had for price action. So for now, the US dollar is continuing to trade lower. Now, as far as the interest rate narrative and the forward projection, that is what traders were really looking at. So Powell went ahead and said that the base case is that they hold interest rates neutral for now, or they lower rates, or they lower rates in bigger size increments. So that was dovish, and it resulted in the dollar closing with this big red candle. So just going over some of my favorite currency pairs to watch right now, we have the Aussie dollar here. The Aussie dollar also delivered a rate statement, and they did say following the rate decision, they were actually going to look into raising their interest rate. So you add that along with a dovish Fed here, we did see Aussie dollar push a little bit higher. I would love to get an opportunity to buy the Aussie dollar on any sort of retracement here, as long as we stay within this range. Euro dollar as well, we were at this very important resistance level here. We closed right above it, so any pullbacks going higher, I would be looking to do that all day long. New Zealand dollar here at this level of resistance. We are here. I don't know if we're going to continue so much higher here. I'm going to stay out of this one for now. Dollar yen, this would be an interesting setup to watch. It did appreciate here before the Fed meeting, and now it is kind of trading lower here. This is the weekly time frame. You want to also mix in a Bank of Japan that is looking to hike rates. Now, they did say that they are paying close attention to what other central banks are doing to not really shake things up. So with an easing dollar and also a Bank of Japan that's willing to hike, I doubt that they're willing to do it aggressively because they will cause a little bit of a shakeup in markets. But perhaps, if dollar yen does find its way somewhere over here, or once it stabilizes, then we can see a short opportunity. But you're also going against the swap cost here, so I don't know about shorting dollar yen long term. Dollar Swiss, I'm looking to pick up a contrarian trade here, collecting some income. One of the good things about the Dollar Swiss is that it has a really healthy positive swap going long Dollar Swiss. So although we did see a bit of a drop here in the Dollar Swiss, a pretty steep one, if that, I am looking to go ahead and build a position long term on the Dollar Swiss. I do think that if we can get around to this lower end of the channel, that would be a great healthy place to ultimately get filled at. So I'm going to establish some positions along the way there, collecting some positive swaps, and hopefully, if I'm correct, then this can be some sort of a bottom here for the Dollar Swiss, and we can trade it higher, maybe up into this level here or beyond this 0.8400 level. Reason being is because ultimately long term, I am bullish on the dollar. So it'd be nice to collect some interest payments along the way. Dollar CAD, I could imagine that it went ahead and dropped lower, and it sure did. I did have a level marked up here. I don't know why it's gone. Let me go ahead and put that back here. So Dollar CAD has been the underdog recently. So it was performing pretty bad, but now things have really picked up here. GDP is looking good for the Canada. Labor market's improving in Canada as well, which is great. So you add the performing Canadian dollar alongside a Fed that is looking to ease and we can probably see that dollar Canadian is going to have a little bit of a tumble here. If it does continue to tumble, one of the levels that I would look to kind of see where it can stop would be somewhere around here. I'm not going to trade it though, but just a level to keep in mind of. As I mentioned before, US 10-year yields were trading higher intraday up until here, and we closed red for the day. So I was actually curious because the bond market ultimately decides whether interest rates are going to drop for housing, mortgages, all that good stuff, all the stuff that, you know, the consumer, the everyday person really cares about. It doesn't matter if the Federal Reserve cuts interest rates if yields are still high. Interest rates for mortgages and cars, they don't follow the Fed, they follow yields. So seeing that the US 10-year yield did go ahead and fall here, that is what matters, and that's a good sign for the everyday person. If the 10-year yield continues to drop even more, we can expect a dollar to follow suit with that, and perhaps the everyday consumer will be now offered lower interest rates on their houses, their cars, credit card debt, all that good stuff. End up with metals, gold here, pretty flat, pretty ugly chart to be participating in my opinion. Just a slow grind higher after this being pulled back. A softer dollar will be good for metal, so we can expect gold to probably revisit these all-time highs. We'll see what drives that. Silver, what a mean chart to look at now, past $60. Also benefiting off of a softer dollar here. So what's on my radar? We do have the Aussie dollar RBA looking to raise interest rates. We do have a Fed that is pretty much, base case holding rates or even cutting further. So I will be looking to go ahead and enter Aussie dollar positions on any pullbacks. So perhaps something like this, that would be pretty good. Euro dollar, we did go ahead and break this level of resistance, pretty solid close above it. So I'll be looking to trade it up into the 17,200 level or beyond, depending on where price action goes. Dollar Swiss, my more long-term contrarian play, I'll be looking to add a position and potentially pick up some more on the way, ultimately targeting a higher level with the strong relative dollar, holding the higher real yield in the very long term. We do have a healthy positive swap there, so I'll be collecting interest every single day that I hold that trade overnight. Hey everyone, thank you guys so much for watching. I hope the video was informative and valuable. I'd also like to ask you if you think today's comments from Powell were dovish or hawkish. Feel free to leave a comment down below. I'm interested to see what you guys think. Thank you. Have a blessed rest of your day, and like always, trade safely. Bye bye.